okay since we hit 100, 120. This is not so bad. Talk to us about how you dissect all the volatility we're seeing in energy markets.
Yeah, I think it's, I mean, there's kind of two sides of the coin here. The first is, of course, you've got war in the Middle East. Spiking oil prices is not new. We saw this
Now, we've been on a wild ride since this weekend where we saw oil.
Iran's ability to actually, blockade the Strait of Hormuz is virtually nil. And you've even heard recently some reports of, ships just kind of turning off the transponders and kind of sneaking across. So, there's also kind of the practical implication here of, if everybody kind of gets behind and says, all right, let's just, figure out a solution here. Iran is clearly in a state where they're, basically just swinging as they go down. There's, nobody in charge. They're firing missiles at, basically, anybody within earshot. So it's very chaotic for sure, but it is difficult to see how this structurally persists for, much longer than, several weeks.
Okay, it does seem like it's a timing issue because obviously it is a key corridor to where, a good chunk of global oil passes through. But maybe this is, for all intents and purposes now, a timing issue. When you think about the broader economic picture here in the U.S., because obviously now that we have high oil prices, there's a concern about impact to inflation. We recently got that much weaker than expected jobs report, along with some revisions for the prior couple of months. How would you characterize the health of the economy now?
Yeah, the jobs report was a big one because a lot of people, for several quarters, ourselves included, have been kind of looking at the jobs market and waiting for potentially cracks to emerge. The U.S. economy has done a fairly good job of kind of navigating the soft landing, which is, I think, what was priced in. And any upset to that is going to be tough for stocks, especially with frothy valuations, which we had coming into this year. So when you look at the stagflation scenario, that's what's really concerning. If we do get oil persisting, at levels where it is right now, and you get, the labor market starting to show some signs of stress, in part because of, AI, things like AI disruptions, which we've already seen, and that looks like it could be picking up. The stagflation scenario, could be tricky. So the jobs market is something where it's not necessarily flashing red signals just yet, but it's something we're keeping an extremely close eye on.
So, speaking of the tech sector and AI disruption, we've started to see some recovery. One of the things we've been keeping a close eye on is the IGV, and we've seen a discovery in there, or recovery rather, recently in there. Do you think that's short-lived or just a blip because of all the destruction that we've seen, the SaaS apocalypse, if you will?
Yeah, no, it's an excellent question. When the SaaS apocalypse happened, it was interesting. I think it was overblown. at the category level, but there are definitely names, including big names, that are going to be permanently impacted through AI, and we've seen that. Even just anecdotally talking to people, companies like Microsoft, for example, I think are going to benefit from AI. If anything, this looks like probably a generational buying opportunity. But you've got other, companies like Salesforce, expensive legacy CRM software. They don't own the data. It's customers' data, and all of a sudden Claude Code or AI tools in general can start to replicate a lot of that features and functionality. It's hard to see how they don't see margin compression going forward. And so some of these discounts that we've seen for these software companies, I think, are deserved, but not the entire sector. So to your point, I think that comeback in the software sector is not surprising. I think we'll start to see that tick up, but I also think there's going to be some discrimination within that sector among investors in terms of who really benefits from AI and who potentially is displaced or competing with AI.
Okay, so speaking of that, let's talk about the heavyweight there, that being NVIDIA. Now, is NVIDIA still the clearest way or the clearest path, do you think, with regard to the biggest beneficiary of the AI build-out? I mean, keep in mind it still has a more than $4 trillion market cap.
Yeah, I mean, that's, look, NVIDIA is the train that keeps on chugging. Their consensus 12-month price target, I think, is roughly 50% higher from here. And before, I would be the first one to kind of balk at that, but then you look at their forward multiple and it's not that crazy. And it's because, this data center revenue just continues to surge. All these big, massive capital expenditures from, all the big players, Amazon, Meta, Alphabet, are directly going to benefit NVIDIA. And if we were to have this conversation last quarter, everybody was concerned about the CapEx build out. What's the ROI going to be? But again, I think in the last couple of weeks we've started to see exactly how this is going to manifest. And it's tools, not necessarily just Claude, but they're the first ones out there making headline, but putting tools in the hands of consumers and small businesses that are going to basically move time, compute, and spend away from some software. Not all software is a complex, but some software companies onto native AI. And so I think that's actually been a boon for not only the AI narrative in general, but NVIDIA in particular. So NVIDIA, it looks good. It's got a huge market cap, and I wouldn't be betting on a multi-bagger from here, but the outlook is extremely strong, and I think as importantly or more importantly, the outlook for AI adoption and the structural use case for chips is very strong.
All right, Ben, we'll leave our conversation there for time. Great conversation. That's Ben McMillan, founder and chief investment officer of IDX Advisors. Coming up, Tom White joins us to take a look at the latest read on the small business environment, and Alex Coffey joins us to break down an upgrade for CrowdStrike. Morning Movers, we'll be right back.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com. The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Welcome back to Morning Movers. I'm Diane King Hall, coming to you live from the New York Stock Exchange. Time now for the economy check. For that, let's go right over to Tom White. He's co-host of Fast Market with a check on the temperature of small businesses. So we got the latest reading on small businesses. Take us through what that looks like, Tom. And good morning.
Yeah, good morning. I think if you take a look at the pullback here, 98.8 versus 99.6, which was expected, and that's below the 99.3 that we saw last reading on this. Hiring plans fell. Percentage of firms seeing higher selling selling prices and expecting a better economy started to fall a little bit. That's not surprising, right? This number can probably be tossed out, to say the least, at this point. Now, we did see some of those private payrolls come in a little bit better than expected in ADP, but then on the government non-farm payrolls, those private payrolls had started to pull back a little bit. So it's going to be choppy, I think, along with the overall market. I think you've got to focus more on maybe headline risk here for markets, just due to the fact that crude oil is volatile. The equity markets are volatile, and I think that's what you should probably keep an eye on here, because some of these data points over the next several weeks and maybe even the next month or so are going to be a little bit choppy.
Okay, yeah, you called it this. You said this week would be more about, you and Alex said this about the headline and risk, and it seems like obviously that's the case for the markets, especially when we saw that reversal yesterday by the close, given the direction of crude oil prices. When you think about today, does that remain the focus?
Yeah, we'll have that call with the G7 again today, their second call in a row on a daily basis. That might give us some clarity about what's going on. But then you look at some of the commentary that's coming out of the administration right now. Yeah, Trump alleviated some of the concerns yesterday. We saw a massive pullback in crude oil prices. We're down another 4% today. That's the benefit here. But then, you know, Pete Hegseth comes out and he says, hey, this is going to be the biggest day of our strikes on Iran. Israel is going after Hezbollah a little bit more today also. You got some drone strikes that are occurring in UAE and Qatar. So this rhetoric is going to keep coming. Now, you know, the administration can kind of push back on any of the positives that might come down the line. But right now, I mean, this is going to be a choppy market. And I think investors have to be concerned with that. Now, one of the keys that I'm looking at is consumer spending and corporate spending at this point. Will we see any meaningful pullbacks that are going to negatively impact maybe the economy moving forward? We've already seen the Atlanta Fed GDP now pull back their estimates over the last couple of readings. So this is going to have maybe some lingering effects. I'm not sure how long it's going to last. I think that's what everybody wants, is some clarity on how this is going to last. But a couple key notes here would be, hey, will traffic start to resume in the Straits of Hormuz? That's going to be on the tip of everybody's tongue. We'll get some clarity out of the G7. Will they release any energy that is needed right now? Because if you look at what is getting stopped on a daily basis, and it's not just the flows through the Strait now, Diane, it's actually the production cuts that we've seen, whether it's from Kuwait and UAE and some of the other members of OPEC Plus, Saudi Arabia making some comments also. So those are the things you're going to have to focus on here today, and just expect more volatility. I can't imagine that VIX going below the 20 level anytime soon, and maybe the risk is to the upside at this point as we rely on headline news.
Okay, good stuff. That's Tom White, co-host of Fast Market. Appreciate that perspective. Time now for a look at CrowdStrike. Joining us for that is Alex Coffey, co-host of NextGen. Seeing CrowdStrike shares tick a little bit higher off the back of an upgrade. What's the latest here?
Yeah, good morning to you, Diane, as we take a look at CrowdStrike on the heels of an upgrade at Morgan Stanley to overweight from equal weight. Analyst Meta Marshall upgrading CrowdStrike to overweight. 510 price target up from 487 on those shares. They believe that CrowdStrike is best positioned in security to outperform in the coming years, saying that the platform is most able to gain share. They say that they have AI tailwinds in their next generation security operations center business, as well as opportunities to expand in endpoint. They also said that the recent pullback in shares with the overall tech and software pullback creates an opportunity. They moved CrowdStrike also into their top pick bucket, despite seeing more upside in the short term for other names. So kind of a medium to longer term idea for Morgan Stanley and the team over there, but they do like it. CrowdStrike reacting positively as well this morning, up about 2% in the pre-market.
It's been interesting to see how CrowdStrike has been caught up in the SaaS apocalypse this year, and there were some who said that it shouldn't have been, and those in the cybersecurity space shouldn't have been. Final thoughts you want to leave us with, Alex?
Yeah, analysts are a little bit more mixed than they have been maybe in recent years on this stock. About 2/3 of analysts are in the bullish buy camp, about a third in the hold camp. I do see one sell rating, but it looks to be relatively stale going back to December. So for the most part, between buy and hold, 12-month consensus price target just shy of 500 a share.
All right, good stuff. Thank you, Alex. That is Alex Coffey, co-host of Next Gen. Coming up, we'll continue to break down the market impact of the conflict in the Middle East and how shocks are reverberating through various asset class. We've got renowned economist Stephen Moore joining us next on Morning Movers.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market, weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need, all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Morning Movers. I'm Diane King Hall, live from the floor of the New York Stock Exchange. We've still got a little bit of pressure on futures this morning as investors regroup after quite a volatile session on Wall Street yesterday. S&P Minis now off by 0.25%. NASDAQ 100 futures lower by a little bit more than 0.1%. Dow futures off by just shy of 1/3%. Small cap futures lower by 0.6%. Investors digesting the latest fluctuations in oil prices, which although oil has taken a step back, it is still above $90 a barrel. So that's a risk factor that investors and economists are worried about as it comes to the potential impact to inflation. So we're looking at a 5% pullback in crude oil, but for West Texas Intermediate, but seeing it sitting at just around $90 a barrel. Brent crude pulling back as well today, off by about a little bit more than 5%, but above 93 a barrel. Yield on the 10-year, a little change this morning. The dollar pulling back. Gold ticking higher as investors seek some protection amid all the volatility. We're seeing gold up 1 3/4%, approaching $5,200 an ounce. Bitcoin has been surprisingly resilient amid all the volatility of late, and the pullback in risk assets, I mean the pullback that we've watched in equities, again, although we finished higher yesterday, we've seen some pressure recently. Bitcoin now above 70,000, so ticking up more than 2% right now, but we're seeing some momentum across crypto this morning. Ethereum higher as well. Not by as much, up by 0.8%. Solana also a little bit higher. We're seeing some nibbling happening in the crypto market. We'll continue to keep our eyes across the gyrations within the market as investors continue to process the latest with geopolitical conflict. Coming up, we'll have Options Corner. We'll chart and trade Oracle ahead of its earnings, which come after the close today. Morning Movers will be back after this break.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardas and connect with me on LinkedIn or Instagram for more.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Welcome back to Morning Movers. I'm Diane King Hall, live from the floor of the New York Stock Exchange. Joining us now for a perspective on the geopolitical risk as it relates to markets and the economy. We want to welcome in our next guest. That's Stephen Moore, renowned economist and co-founder of the Committee to Unleash Prosperity. Stephen, thank you so much for joining us this morning. One of the things I want to talk about at the outset of our conversation is energy prices. We're obviously keeping a close watch on that. And the gyrations in crude oil markets. It's often the quickest way that geopolitical events feed into the economy. Although we've pulled back some, oil prices are still elevated. How much of a risk is that for inflation?
It's a big risk. I mean, energy is the master resource, right? It's integral to everything we produce, whether it's food, whether it's manufacturing items, whether it's technology. Everything uses energy as an incredibly important input. And so when the price of oil and gas goes up, the price of everything else tends to rise. So, we've been making great progress in terms of bringing inflation down to below the 2% Fed target. This is certainly, at least temporarily, going to cause the inflation rate to bump back up. The real question is, will this be just a bump in the road, or how long will it last? President Trump yesterday said he thought it would be, maybe a couple of weeks. I hope he's right about that. And if he is, we could see the price of oil. Remember, before we went into Iran, the price was at about roughly $55 a barrel. It went up to almost over $100 a barrel this weekend. It's come down to 80. So you're right. There's a lot of gyrations here, but I anticipate, what that means, by the way, for the average driver, that you're using gasoline, you're going to be looking at $4 a gallon gas for the next several weeks.
Okay. Yeah, I mean, I've shared the story of I went ahead of, I knew prices were going to tick up. I went before the uptick to fill up, but it's not like you don't have to fill up the next week and then the next week and then the next week. Now, right. President Trump saying last night that exactly if Iran does anything that stops the flow of oil within the Strait of Hormuz, they will be hit by the United States. This is a quote of America 20 times harder than they have been hit thus far. When you think about, obviously you're very familiar with the president. You've had a relationship, and I'm sure still do.
Right.
When you think about that and the potential for this to be short-lived, what's your thought on that, given your insider knowledge?
Well, I'm certainly not a foreign policy and military expert, so I don't know, how long this is going to last. All I know is what the White House is telling us, and so I pray that that's the case. We all want this to be over quickly and victoriously. What I can tell you is that the price of oil, it fell to about $75 a barrel last night, and then now it's climbed back up to 80. So those gyrations continue with the latest news of what's happening. Obviously, as most of your viewers know, a lot of this depends on what happens with the Straits of Hormuz and whether we can get that oil, which, all the Saudi Arabian oil, so much of the Middle Eastern oil flows through there. It came to basically a standstill yesterday, which is one of the reasons the price went up so high. You can see it spiking on the screen there. So I guess I don't know. I don't think anybody really knows for sure how long this will last. But I will tell you this, the United States, this is going to surprise probably a lot of your viewers. The United States is actually we're not only the biggest oil and gas producer in the world today, we are also a net exporter of oil and gas. So, we, thanks to drill baby drill policies, we are less vulnerable than we would be from these supply shocks in the Middle East. But look, I'm 66 years old. For most of my life, we've been kind of vulnerable to these situations in the Middle East.
That's right. I understand this isn't the first time that we've seen something like this with regard to, exactly.
Right.
So let me ask you this. There are now increasing fears of a stagflationary environment. Do you think that's a realistic concern?
At the start of the year, I was super optimistic about the U.S. economy, and I remain really optimistic. And we got the big, beautiful bill, tax cuts kicking in. Tariffs are being, looks like they'll be rebated back to people and companies in the next few months. The investment that's going on in the United States is incredible. So it's a very, very strong economy. But look, the oil situation is a wild card, and it's so hard to predict, what's going to happen over the next couple of months with respect to what's happening in the Middle East. But if this gets resolved, as we hope it does, quickly and victoriously, then I think you'll see a very strong economy in the second half of the year, maybe with 4 to 5% rates of growth. I mean, the investment numbers that are coming in right now are astoundingly high, especially in AI, in the tech sector. February was the top month ever for new investment in AI. It was astounding numbers, with 90% of the global investment happening here in the United States. So I guess you could put me in the bullish side.
Okay, so in the bullish side, and given your insider knowledge of the Fed, you follow the Fed closely, you're a former Fed nominee, you know many of the players. Where do you think all of this leaves the Fed? It feels complicated to me when I think about, one, the gyrations in the oil market and the impact to inflation, and the recent look at the job market. What's your thought on where this leaves the Fed?
That's a very tough question. If you had asked me, before the Iran strikes, I would have probably said, look, if we keep if the Fed keeps rates where they're at or lowers them a little bit, I don't think it makes a huge amount of difference. I mean, in other words, I think the economy's on a good slope, and we want to just make sure we get inflation down and the economy growing faster. This new bout of inflation that we're going to see complicates things. It makes it, some people say it makes it more obvious that we should cut rates. Some people say, like me, I'm a little hesitant as prices are rising for the Fed to be pushing more money into the economy. So quite frankly, I don't quite know exactly what the Fed will do. I think it's going to be a very tough issue for the Fed to deal with, because we want more growth, but we want less inflation.
All right, we'll leave our conversation there for today for time. That's Stephen Moore, economist and co-founder of the Committee to Unleash Prosperity. Thank you so much for joining us. And thank you for joining us today on Morning Movers. I'm Diane King Hall. Download the Schwab Network app. It's available in the App Store, and tune in 24/7 on schwabnetwork.com. Stay with us. You've got Opening Bell with Nicole Petalides up next.
We got 30 minutes.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
morning and welcome to Opening Bell here on Schwab Network. I'm Nicole Petalides and I'm so glad you are with us. We've had a wild ride here on Wall Street yesterday and today, a reversal in stocks, reversal in oil, and so much to watch. And here's what's on deck. We'll continue to follow and focus all things crude oil. It continues its slide down. It now has an 8 handle, right? Had been at nearly $120 the barrel. And in fact, we have the perfect guest for this. The founder and CEO of Tsakos Energy Navigation, Nicholas Tsakos, the CEO, will join us, and he'll have the latest on what's going on in shipping through the Strait of Hormuz. It's based in Greece, and so he has the inside track. Really looking forward to that conversation. In the meantime, we'll have the latest on the AI trade after HP Enterprise earnings, as well as the latest revenue numbers from Taiwan Semi. Okay, here's a look and a quick check of the markets this morning. We had an 1,100-point reversal yesterday. Wild ride. The S&P 500 futures right now down almost 0.2%, losing 10 points. The NASDAQ 100 virtually flat. And we have the Dow Jones Industrial Average futures lower by 100 points, and the Russell down 0.5% for the futures. Oil and gold, as I mentioned, oil with an 8 handle now, 88.94. Had been a little lower than that even. And Brent, by the way, if you want to know, is at $92. And gold, $52.05, up $100 today. Bitcoin's at the 70,000 threshold, 70,765. That's up 2.2%. And 412 on the 10-year bond yield. And the dollar pulls back, 98.68. That is where we stand. And a good morning to you, everybody. And I'm glad you're with us here on Opening Bell. Alex Coffey joins me now to help set up the trading day, co-host of Next Gen Investing. And obviously, oil remains front and center here on Wall Street. Some of your thoughts on the action.
Yeah, good morning, Nicole. Happy Tuesday. What I would say is I think the comments from the president at the end of the day yesterday, or at least the reports on them from CBS, did, kind of bring in the upside risk just a little bit, maybe start to cut off that tail just a little bit, given, kind of centering the conversation around an operation that is winding down as opposed to maybe one that is going to be super prolonged. But it's a fluid situation. It can certainly change. But you look at the price action since those comments in a phone call were reported on by CBS, you had a significant upside reaction in the S&P and the NASDAQ. You had a substantial repricing to the downside in volatility, and you had a substantial repricing to the downside in crude oil. That doesn't mean that all of those markets aren't substantially different prices than where they were just a few weeks ago before this happened. I mean, crude oil is still trading around $90 a barrel, and that volatility is absolutely still having a lot to say about the direction of the overall market. That said, I think the fears, the percentage chance of a 150 crude oil, something like that, has come down. And as a result, you've seen volatility come out of the marketplace, you've seen volatility come out of the oil market, and you've seen the S&P 500 work its way back up the levels as opposed to back down.
Yeah, and the question would be, production. We've obviously seen slowed production or stopped production because they had nowhere to store it because they couldn't move it through the Strait of Hormuz. So much of this will be about getting the Strait of Hormuz to be functional and not have this disruption. And I'm looking forward to that conversation with Nicholas Tsakos. Also some great earnings from that company. What about what's going on with the VIX right now?
Yeah, Nicole, I think that the VIX is a very good marketplace to keep your eye on, whether it's forward/VX futures, which are a little bit more tradable, or it's the actual VIX itself. What you're seeing is a VIX that has come down from a 30 handle to one that's settled in the mid-20s at the moment. To me, that makes a lot of sense because this conflict is not resolved. The oil transportation and logistics issues have not been resolved. We just got some of those comments from Pete Hegseth, the Secretary of War, that this is going to be one of the biggest, most intense days when it comes to strikes. So
while the comments from the president suggested that it's closer to complete maybe than not, it doesn't mean that it is complete just yet. So there's still risks out there. That's reflected by the actual level of volatility. But volatility has come down quite a bit, and I think that also makes a lot of sense.
Understood. Small business optimism, how are we doing there, Alex?
Yeah, small business optimism largely in line with the expectation, maybe slightly missed. 99.6 was where it was expected. That was expected to be a slight uptick from where it was previously at 99.3. It came in at 98.8. So I would say pretty close to in line, a small miss, maybe a 1% miss on small business optimism, but not really a big market mover when it comes to market reaction. They did say, though, higher sales and less uncertainty, so that's something to keep in mind as we look ahead, although this, of course, was going back into February, and we know that some of these geopolitical uncertainties really have ramped up in the last couple weeks and will probably not be reflected until the March reading.
Yeah, and I was listening yesterday to the president when he spoke live, and really sounds like a majority of, he called it an excursion into Iran, really seemed like a majority of it was complete. And maybe there are some pieces left over, but I think between that sort of feeling of completion coupled with looking to the G7 perhaps for more oil, that brought oil down. And the Strait of Hormuz certainly remains a wild card. Alex Coffey, thank you for all of that. Really appreciate it. Now we get to Jenny Horn, host of Next Gen Investing, and you can catch both of them at 1 p.m. Eastern time. So let's start with HP Enterprise. Did have its numbers, Jenny, after the earnings. Let's hear the details.
I will say that the numbers are stronger than what we're seeing as far as price right now. And so we do know that they continue to say that AI and data center development is really continuing to fuel really strong demand for their networking products, prompting it to actually raise its outlook for the year. So they've taken several measures to ensure that they do have enough memory to keep up with customer demand, as of course supply shortages are sending prices soaring. And so that was framed very interestingly, and that was also a major point of concern actually amongst the sell side this morning in reaction to this report. But we did see that the demand stemming from these AI deployments and infrastructure modernization, as well as the pooling of resources amid commodity shortages and price increases, are all things that they're factoring into now their forward-looking guidance. The market is facing, of course, this tight supply of certain components, most notably with DRAM and NAND memory, which is leading to a sharp increase in costs. So they do expect elevated prices to persist now well into 2027. And so to address this shortage, HPE is focusing on securing supply by expanding multi-year agreements with memory partners. So management also did say that they're adjusting their prices across their portfolio to protect those margins, saying that right now DRAM and NAND do make up over half of the bill of material costs for a traditional server. And so the share will continue to rise as component costs are not expected to come down anytime soon. And so I think that's also right now the overall drag on price this morning. We do know that they said orders could still come in faster than expected in the first quarter. Profitability was roughly 31 cents a share. That was, slightly lower on a year-over-year basis from last year. But stripping out one-time items, adjusted earnings per share were 65 cents. That was actually ahead of estimates. While revenue rose another 18%, and networking sales nearly tripled to $2.7 billion, driven in part by a five-fold increase in data center networking revenue. So that has also been a huge driving force of demand with their routing products, which have more than a 20% increase in their orders. So I took this as more of a mixed report. Frankly, you could see why, again, a higher unit price for both their server and storage products and having to accommodate for this memory shortage are going to be near-term headwinds, as well as right now the appetite for some of the growth to be challenged for any of these tech names with the volatility in the overall market. It's just not being received quite as well, it seems, this earnings season, Nicole.
Understood. And then we also have to talk about Taiwan Semi. They really gave us a glimpse into the spending that they were doing. There was a lot of excitement surrounding this biggest name. Some of the February revenue numbers?
Yeah, no, I will say that the headline number looked a bit stronger than some of the context. So we did see that they did rise its sales by 22% in the month of February, but dipping this morning as that was a bit of a slowdown. And also, this company does, of course, have international exposure to, I mean, like the broader geopolitical tensions, but they are, of course, still the biggest chip manufacturer and key vendor to some of the biggest names. I always think these numbers are still super important. February, we did see climbing 22% year over year just over the past month, and their revenue growth for the first 2 months this year did total roughly 30%, which did total roughly $22.6 billion when converting into U.S. dollars. And so analysts were expecting roughly 33% growth for that first quarter. So that was a slight miss. And again, this also was, I mean, following earlier this month, TSMC posting blowout results for its fourth quarter, saw CapEx increase by 37%, which really underscored the AI chip demand that continued to be really boom for this stock. I also think it's really important to note that when we talk about Taiwan Semi, and I mean, just like the broader market right now, and of course this morning's price performance, TSMC not directly dependent on some of the Strait of Hormuz for chip shipments, but it's indirectly exposed because right now it's liquefied natural gas power as well as helium petrochemicals are derived inputs that do see some degree of exposure to Qatar, which is almost right now entirely exposed to the Strait of Hormuz. So we could see some supply chain snags. They have not really commented on this yet, but I do think it's something interesting to watch because, again, they are the major component supplier for NVIDIA, AMD, Broadcom. The list just goes on and on. So we need this name to remain stable from a supply chain perspective, and I guess time will really tell if we're able to see them ride this wave of volatility.
All right, Jenny Horn, great to see you. We really appreciate it. We're seeing Taiwan Semi slightly lower this morning. And we'll get you ready for the trading day, folks. Don Nesbitt is standing by from Emerald Advisors. And later we'll have Sakos Energy. TEN is the ticker symbol. Really looking forward to having this conversation with a shipping company that knows what's going on there in this geopolitical tension. Also some great earnings from the company. We'll be right back.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Welcome back to the opening bell, getting you ready for the trading day here on Wall Street. Don Nesbitt is with us, portfolio manager, Emerald Advisors. Thank you so much for being here. We know that the strikes continue. Pete Hegseth has been noting that. And the president has really put out some big threats pertaining to the Strait of Hormuz. So we do have that wild card that continues. At the same time, we've had a complete reversal when it came to stocks yesterday. Oil's back in the 80s after being near 120. What are your thoughts here?
Yeah, thanks for having me this morning, Nicole. What this shows you is the volatility surrounding not only the markets and financial markets in general, but particularly the oil and the energy sector. And, this is a great opportunity to remind people. I like to talk about how there's a difference between stock selection, which is all about finding your alpha drivers, and portfolio management, which is about managing the risk of exogenous shocks like you've seen here in the oil sector. Also, on the individual names you might hold with sudden changes in the news.
Let's go.
And so at this point now, you expect this to continue, right? I mean, it can't be done immediately. How do you proceed with this market?
Well, yeah, that's a good question. What is going to be the magnitude and the duration of these events? A year ago, almost a year ago, when we saw the bombing of the Iranian nuclear facilities, the reaction of the energy markets, financial markets in general, was very quick. This obviously looks like it's going to be more protracted. As you mentioned, we saw oil spike up initially to near $120 a barrel. Now we kind of settled down into the $90 barrel oil. Still a lot of volatility and uncertainty. So again, it comes back to how you're managing your portfolio, and in particular, what you're doing here in the energy sector. Remember that even within the energy sector, you have different degrees of what we might call beta or reaction to these oil fluctuations. You have the upstream producers, names like Diamondback, EOG. These are very sensitive to oil prices. Then you have the downstream, the refiners like Valero, Marathon Petroleum. These are a little bit more insulated from the price changes of oil. Actually, they might be negatively correlated because they're more focused on the crack spread and the difference between the final products and the oil. And then, of course, you have the moderate integrated major companies like Shell, Chevron, Exxon, which are basically a bit more stable and have more stable beta to the energy prices.
Understood. Where does the AI trade fit in here? Near term, long term?
Sure. And that's a good question, because once this is resolved, where are we going? Probably back to think about where we were 2 weeks ago before all this hit, and back to the AI trade. AI is still going to be a major influence on the markets in terms of the productivity. Going into this, we saw a lot of the scares around AI, job replacement, and that sort of thing. I think a lot of that was overdone, particularly in some of the software stocks, named like a Microsoft. I think they're going to be fine. They're going to actually benefit from AI. However, as I said, before the current oil war horror stories, you had the horror stories around AI replacing jobs and focusing on more of the negative side of things instead of the positives.
What about a name like Microsoft? Is there opportunity, or what do you think? Yeah, you're looking at it
here. I think it's an opportunity.
Chart. Yeah.
Yes, I think it's an opportunity here to buy. I think it's an example of a name that got trounced because of concerns with AI. I think there will be some of the smaller applications and so forth that are going to be replaced by AI. AI does represent an existential threat to them, but Microsoft is going to benefit from this. They have a large customer base. They have a lot of data. AI can help improve their services, provide better services, and I think they're going to be a long-term winner from it.
Understood. What about the other Mag 7 names? When people ask you about those, is there opportunity in any of those? Because they're certainly not at their highs.
Sure, and again, you go back to the chip makers, names like NVIDIA and so forth. Yeah, they're going to continue to benefit. Of course, the same questions are in place as there were 2 weeks ago before the initial these events in the Middle East, and that is, how long can they continue? Names like NVIDIA, how long can they be on top before the competition catches them? Can they continue to grow at those historically high rates?
And at this point now, what about the rate environment? I mean, it's almost looking like we may not get any rate cuts anytime soon. Did we need them?
I don't think for the equity markets. Again, I'm going back to 2 weeks ago before the events unfolded in the Middle East. But I don't think that the primary driver of the equity markets is interest rate cuts anymore. When you're trading at a 22 multiple, that's on the high end, interest rates cuts usually allow expansion in the multiple, higher PEs. But I think we're already at the top end of that. And so we have to focus on earnings. On the one hand, interest rate cuts are good, helps expand the multiple, but it's earnings we're focused at, and interest rate cuts are also generally a sign of a weaker economy. So therefore, I'm not too worried about the Fed and interest rates at this point. It's really the economy and earnings that we're going to be looking at.
And you did mention the coordinated release of reserves by the G7 nations. I mean, do you think that oil now, I mean, maybe it gets a spike, but do you think oil sort of stays around these levels now, or are you expecting a lot more volatility?
Well, if you look at the futures market, at the end of this year in December, it's pricing oil at down around $71, $72 a barrel. And, I think as some of your earlier guests mentioned, going into this, we were at $60 a barrel or so. And so, yes, I think that represents a fair price. You'll probably have a little bit more of a premium that's left in the oil pricing, than we had 2 weeks ago before these events. But at $70 a barrel, that's not hazardous, I think, to the economic health. $120, $150 barrel, that's painful. That's going to come through in inflation. It's going to hurt the consumer and so forth. But at $70 a barrel, we're manageable.
What sectors, finally, I know you mentioned Microsoft with the sell-off that we've seen in the software sectors, that you said Microsoft was attractive. What sectors would you say are the go-tos now for investors?
Sure. Well, before events, recent events in the Mideast unfolded, financials looked attractive. They're benefiting from the interest rate cuts. They're benefiting from kind of the late cycle economy. And so I think you look at names in there like PNC Financial. It's a large regional. It's high quality management. That's the other thing that we need to look for later in this cycle. And we were starting to kind of, maybe on our worry list is credit quality. Can that hold up? Especially in the private equity areas. That's my worries that something can break in that sector.
Yeah, Don Nesbitt, Portfolio Manager, Emerald Advisors. Thank you so much. All right, folks, we're going to have the countdown to the opening bell. We'll have Tsakos Energy's CEO, the ticker symbol 10. The stock is at a 52-week high, running tankers in the Middle East. Let's find out what the CEO has to say. We'll be right back.
The morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Good morning and welcome back here to Opening Bell. We are live on Wall Street here at the New York Stock Exchange. It's the countdown to the start of trading, and we are ready for anything after the volatility we've seen, the oil swings, the stock swings. Sam Vadas is joining me right now as well to take a look. Good morning, Sam.
Good morning. I'm sure that chiropractors globally are very busy right now with, of course, the seesawing, the whiplash that you just mentioned, Nicole, particularly as we look at the overnight session in Asia, across Europe, currently trading right now. We have seen a nice rebound. Of course, we still have some caution in these markets, as we've been discussing this morning, as you can see here with these futures, despite the fact that we've got WTI in the $88 range, of course, coming off the back of President Trump's comments yesterday about the war ending soon. A lot of the direction of these markets depends on these oil prices and the duration of this war, but we continue to track a lot of lines coming out of the Middle East this morning about fresh attacks, particularly in the UAE with drone strikes and more of the storage facilities pressure as well. Some of the oil refineries actually limiting some of the production. We are waiting for the G7 ministers meeting on, of course, the coordinated oil release as well. So there are so many moving parts. And of course, while markets are very, very focused on the duration here, obviously they are wanting to know what the goal and the intent here is as well with respect to how things are going in the Middle East. So there are still a lot of questions, even though these Trump comments did give the market some breathing room yesterday with that stunning reversal. We saw that follow through throughout the course of the regional session as well out in Asia. I mean, if you take a look at the South Korean Kospi, every day we see these wild swings in the vicinity of 5% lower than 5% up again last night. We had a nice session out in Japan as well, a nice session for Hong Kong. There were some earnings stories that fed into the Hong Kong session. We saw a nice bounce for Chinese equities as well. Some of this sentiment out in Asia was also helped by the data. If you take a look at Chinese exports overnight, a whopping 21% growth. That is as fewer goods are coming here to the US. China is managing to find its way into other markets. A very strong start to the year for Chinese exports as well. Imports also held up as well. We got some nice GDP figures out of Japan as well. No doubt that helping buoy sentiment over in Asia. And as I mentioned, we are continuing to see that follow through. The German DAX up 2.2% right now. The London FTSE is also just higher as well. So we continue to see some optimism in these markets. But as I mentioned, Nicole, we are starting things on somewhat more of a cautious note this morning, as I think, there are still so many questions. And then on the macro front, of course, we throw it ahead to the CPI, but a lot of questions in these markets as to whether that's going to be stale, whether that's going to be backwards looking, given, of course, the new inflation pressures and the conversations around stagflation in these markets right now.
And while we're on the roller coaster, if someone had stepped away and then they come back and they look, the S&P's just down about 0.75% this year. I mean, it would be, sort of, you wouldn't see all the volatility. And I know you have NEO, which came out with a surprise profit.
Yeah, and just touching on that, what you just mentioned, before I get to NEO in a second, Liz Ann has been pointing to this as well. While we have seen only about a 3% pullback from the all-time highs on the S&P 500, it's not the index level that we should be watching. It's the churn under the surface, particularly when you look at that rotation. I mean, take a look at some of the metals, the industrials, which have been been performing well this year. And then you look at some of the technology stocks, we have seen some of these oversold parts of the market where we have seen buying opportunities as well. So something to keep the tabs on as far as what's been happening below the index level. But yes, NIO, look, a historic moment for the company. This Chinese EV maker turning its first quarterly profit to cap off 2025. Look at these ADRs, where they've come from. It's been upward momentum thanks to record deliveries here, validation for its strategy. I mean, it has its premium brand, which does sell at a higher price point for the middle class, but it's come out with this more affordable Onvo brand as well, as it tries to be more competitive. That's working for it. So it's a story of strong sales performance here. We've got cost control, we've got spending discipline, which was down for the year as well. So the question now, I've been speaking to analysts this morning, my Chinese EV contacts saying that have they found the right combination of now the products and the pricing? So the guidance still looks relatively bullish as we do look ahead to 2026 when things are expected, Nicole, to get a little bit more tough for some of these Chinese EV makers as these government subsidies do come off. We know that there are the pricing wars as well that they are grappling with. But suffice to say, some nice numbers, nice gross margins. That is helping these ADRs as far as the NIO stock is concerned this morning, up 7% as we get up and running for trade today.
Sam Vadas, thank you. All right, folks, this is the opening bell.
Let's do it.
Industrial average was up 17 points. Now it's up 5 points. Now it's negative, down 47, down 60, down 62. Looks like it's trying to find a steady footing right there, down 55. Okay, so there you have it. You know, the first tick was higher, but the low was about 64 points lower, now down 26. So you can see that the stock market is hovering right around that unchanged line. Continue to follow this. There's certainly some volatility happening here. The S&P is crossing over the unchanged line as we speak as well. Right now it's down 1 point, but I do see it in the green with every other tick pretty much. So you're trying to find the footing here on Wall Street. We have the CPI and PCE and consumer sentiment. We have a lot of things that are coming out this week. GDP, JOLTS, housing starts, just to name a few. So this is another part of this market in addition to all the geopolitics that we've spoken about. The NASDAQ is the bright spot at this moment, up 0.25% at 25,022. And there you have it. That is the big picture. As far as the sectors go, right now, mostly red, folks, for the sectors, though you are seeing communication services and consumer discretionary and tech higher at this moment. So there you have it. We had AT&T here ringing the opening bell. So they were obviously showed some elation here, up about 0.25%. I bring in Diane King Hall here to take a look at some of the movers and names to watch, including Kohl's. Good morning, Diane.
Good morning. This one's an interesting one to chat about because although they did better than expected, the stock was actually indicated lower in the pre-market, but you're seeing actually an uptick at the moment. So investors choosing to do a little bit of nibbling here despite what indications were when the numbers were first released. So they beat expectations on profit, adjusted earnings per share coming in at $1.07. Street was just looking for 85 cents. Revenue topping $5.1 billion. That was better than expected, but comps declined. You saw that decline by 2.8%. So that was actually worse than expected. Investors were expecting a decline in comparable store sales of about 1.5%. So again, that was worse than expected. We'll continue to keep a watch on this one because again, the indications were there will be pressure, but keep in mind shares have been under pressure year to date, and some of that has been worries about the turnaround story there. Sales are still falling, and this is the 16th straight quarter of year-over-year comp decline. So there's still kind of some choppiness with bringing, or challenges, I should say, with bringing consumers back in stores. They've tried some different creative ways to do that. You know, like for instance, you'll have an Amazon in there, and the hope is that when you're doing your Amazon drop-off, you'll buy something in Kohl's. So it's still some uncertain terrain. The CEO saying the company has, he talked up what he sees as progress. He said it's, quote, made meaningful progress, but did concede that sales were softer than expected. And then some challenges that we heard that are reminiscent of retail story we heard of late from Gap with the weather difficulties and that having to close some stores there. So we'll continue to watch this one. Shares are higher right now, and maybe that's just because the bar was lower going into this one, Nicole.
All right, and up next we have Qualcomm, a downgrade.
Yeah,
on Qualcomm
this one is, you have some less conviction around this one, and shares are responding in kind. Shares are lower off the back of this move by Qualcomm. Bank of America is reinstating coverage with this, but with an underperformed rating. They've got a $145 price target, which, you know, technically there will actually be some upside from here, but they see basically a lid on the opportunity here. They think growth for Qualcomm could lag the broader semiconductor sector. They're only projecting 1 to 2% sales and earnings growth through 2028. So we're talking about beyond this year. And of course, the concern, and I've heard this from other analysts, is just the heavy reliance on smartphones for Qualcomm and the expectation that Apple's going to phase out Qualcomm modems and iPhones by 2027. So that could certainly cost the company billions in revenue there. And meanwhile, you have Samsung, for instance, investing in their own chips, which then put some pressure on Qualcomm's core business here. So those are some of the headwinds that Bank of America sees here. Again, it's an overall lag with the semiconductor space, along with the growth that you're expecting to see in the broader semiconductor space. So the lag to the growth that we're expecting to see double-digit growth, but Qualcomm not expected to be a heavy participant in that growth, Nicole.
All right, and we have Tsakos Energy CEO coming up, so I'm looking forward to that. But we want to cover CrowdStrike quickly, up 1.5%.
Yeah, so CrowdStrike, you're getting some more conviction around this. This is from Morgan Stanley. They're getting more bullish on this one. They've upgraded it to overweight, essentially the equivalent of a buy rating here. They're giving it a $510 price target. They think this one is the winner in the cybersecurity space. They point to strong demand for its AI-powered tools, especially when it comes to next-gen threat detection and security operations. They pointed out how CrowdStrike is gaining market share in endpoint protection, whether we're talking about cloud, identity, data security. And they think that AI will actually be a help to CrowdStrike. You've heard CrowdStrike's top brass talk about this because there was concern about disruption across the software space, and cybersecurity got caught up in that. You have various analysts who say cybersecurity shouldn't be caught up in the destruction that we saw, or the SaaS apocalypse term that we use. And CrowdStrike is one of those that some analysts, et cetera, look to as, you know, it should be a winner, and that they see opportunities within the weakness. So you can see Morgan Stanley is one of those that see some opportunity here, Nicole.
All right, Diane King Hall, it's great to see you.
Great to be with you.
Thank you so much.
You got it.
And folks, coming up next, the founder and CEO of Tsakos Energy Navigation, Nicholas Tsakos, is standing by. Can't wait to talk about the company's earnings. A great quarter again, with now 52-week high here for the stock. But most importantly, too, great time to have him on, as we have now stalled in the Strait of Hormuz. This disruption, what it really means. We'll be right back.
While others recap the news, I help you read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall, and connect with me on LinkedIn for more.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait,
had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim's my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
She looks like you, Dad.
Aw, she's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
And Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Intern, This place is incredible.
It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV.
It's everything in one place. It's like
Schwab. Everything investors need, all in one place.
Come again?
Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now.
Schwab.
Invest your way with Schwab.
Welcome back to Opening Bell. It's so nice to have Nicholas Tsakos, founder, president, and CEO of Tsakos Energy Navigation, with us, ticker symbol 10. And I definitely want to talk about the incredible quarter and year you had this, as the stock is up here 71%. We are over just year to date.
71.
Incredible. A great balance sheet and continuing nearly $1 billion back to shareholders. I also must, and we'll get to this, what is going on in the Strait of Hormuz, what it means, this disruption, which is huge.
Trash.
So we have a lot to discuss.
It's
Let's
not
first start
passing.
with the
Dang it.
quarterly
I
numbers,
need at
and
least
now the stock at a 52-week high.
like
Congratulations on a
36.
great quarter, Nicholas.
Thank you very much. I mean,
We did our test
it
for
looks
today.
really that since the end of the year when we
disappointing,
reported
but
the quarter,
gotta
things
keep doing
have
them.
changed dramatically, I would say. So yes, we have that quarter behind us, a record quarter, but it seems that this first quarter is going to be a very much stronger quarter too.
Yeah, let's talk about that. I mean, I know you have a strong balance sheet, $300 million, and
how
the
these
fleet
stock are
utilization has been around 97%. And so why is this quarter going to be a strong quarter?
Well, since the beginning of the year, we had so much geopolitical disruption, and our job is to move energy as efficiently as possible around the world. And we had the change early in the year of Venezuela. It's the first time that we were the first company to move, let's say, legitimate barrels out of Venezuela for exports. So that's a big game changer for the industry. And then, of course, we have the events now in the Arabian Gulf, which 20% of world's energy, one way or the other, is supposed to be produced and transported from there. And right now there's a huge blockage of vessels. About 250 million barrels of carrying capacity is now blocked in that area. So it's like, if you have 10% of the world's aviation or the aeroplanes being stranded and not being able to fly, and the demand is there.
I mean, that is huge. I heard the CEO of Aramco just talking about this disruption in the Strait of Hormuz being unprecedented, and how your kinds of companies have dealt with so many hiccups and events. And you are a leading tanker company with moving crude, moving product, moving LNG. And now you have this disruption. At this point now, when you talk about 250 million barrels being blocked, you also told me on the telephone last night that even if oil comes down prices, this disruption that's happening in the Strait of Hormuz could take, what, a month, 2 months, 3 months? How long does it take to even out? And what does it mean for folks?
Well, I think it will take, even if everything stopped today, another quarter to be able to go back to some sort of normality. Very correctly, I have been around, as you see, for a long time, but I have not seen that disruption. From the last time you had some sort of significant disruption was when you had the Iran-Iraq war back in the late 80s. So since then, at least the Strait of Hormuz has been functioning and giving energy to fueling energy to the world non-stop. So that's really a game changer, having 20% of the world's energy blocked. There are efforts for some cargoes to go out, but this is really
I still think that
just a very, very small dripping
warfare styles, boats and all that
quantity
are kind
rather
of
than the daily use. And then, of course, you have Yambu, which is a significant port in the Red Sea, where the pipeline allows you to be able to load
Seemed
3 or
just
4
easy as
VLs
hell to
at
hit
the
by
same
now.
time, trying to replace
Light
part
'em
of
up
the
with some,
blockage. But then,
you
of
know,
course, you have
fighter jets.
another disruption by the Houthis, which
Well,
is
that's war.
a very
That's not
aggressive
war and
and
finance go together.
a very aggressive terrorist organization
Unfortunately.
that has continuously targeted vessels.
Yeah, money makes war
Do you
go
have
around.
ships that are sitting right
war
at the
makes
Strait of
money go
Hormuz
around.
waiting to go through? And obviously the insurance is huge. If the Navy told you, hey, we'll escort you, are you going through the Strait of Hormuz? Do you have ships sitting there waiting?
We do, like, I think like every company of our size, we have half a dozen of vessels that are supposed to have been loading from that part of the world. And of course, our first priority is the safety of the crew. Every ship, as you know, it's a small community of 20, 30 people, and we do not want to put them in danger. Other companies have taken some chances doing unsecured runs into that, but I mean, we are a large corporation quoted on the New York Stock Exchange, as we say, so we're not safety first and not cutting any corners.
Right, understood. I mean, you're a 33-year-old company. You're the longest listed company from Greece here at the New York Stock Exchange. You have an incredible record, and I'm well aware of that. These vessels that are sitting there waiting to go through the Strait of Hormuz, you said about a half a dozen ships that are waiting, and they're worth millions and millions of dollars, and they're carrying probably, I don't know how much oil. How long can you sit there and wait? How long are you willing to wait there until somehow you change and turn them around?
Well, we are on daily contact with our clients, the charterers, so we will follow their lead. A couple of our vessels have taken orders to take different routes, which means more ton miles. We have now a vessel, a Suezmax, that was supposed to load in the Gulf, now going to West Africa. So that will bring for China. So that will give more momentum and stronger rates.
Right. Stronger rates, more momentum, because you have to take alternative routes that sometimes are longer. But these tankers that you have that are out 3-5 years, I mean, I don't think you can just change the prices willy-nilly, but I'm sure it's based on some demand, supply and demand, and what goes on there. What about the price of oil, and why is that important? When you saw oil at 120, are you going to be able to, do you see 100 again? Is that possible near term?
I think we're not far from having 100, and that during a crisis period. Right now, there are measures are we taking. You see, we have a new route, a new disruption, I would say, that we have now been allowed to take Russian oil, which has only been moved by what they call gray vessels, non-legit vessels of low quality. So now vessels and companies like us can go back and load for another month Russian oil to India and to the Far East. That's a huge increase in ton miles. And of course, the rates, that's why the rates are staying so firm. I do not believe that $100 is sustainable. I think it's not good for the world economy, but I think we will see it again.
And then it comes back down, so it doesn't stay there. So it's more of a topical type of thing. Okay, I understand what you're saying. Last but not least, when we think about the economies globally, here at home, we had the Citi CEO talking about the U.S. economy, saying that the underlying economy here in the USA is just fine. I know you're there based in Europe, but traveling globally. This kind of disruption, can this disrupt global economies too? And could it be a devastation?
Well, I think it can slow down economies. As you know, economies have been suffering. The 20s has not been an easy period for the world economies. We had the lockdown of COVID, the stop of energy transportation or any transportation on that. And as soon as we are getting out of that, we had the Ukraine, and now we're having the Middle East. So it's been a helter-skelter of, I would say, of roller coaster of movements. But we are the transporters, so we have to adjust our propellers to make sure that we efficiently move energy around the world.
Right. Just quickly, I had a guest yesterday say that oil could go to $150 or $200 the barrel, maybe come down before the midterm elections. Does that seem really far-fetched to you?
I wouldn't want to have, I wouldn't want to see oil at this. It will start bringing oil demand again. We will have oil demand disruption, and that will, of course, be negative for our industry and other industries at the same time. So I think if 100 to 120 can, I think during a crisis we might see it for a short period again. But there are being taken measures. We have more barrels now, 2.5 million barrels that could come out from Venezuela legitimately. That will help. I mean,
right.
As you know.
Let me ask you, I have one question. At the Strait of Hormuz, in your gut, when do you think that's going to be open?
Well, I have no idea on that, but I believe if there is, when we get good military or navy support from the West, I think Greece is a big naval nation. Other nations are going to be helping out. So hopefully within this quarter or within the next quarter, we will see some normalization.
Okay, Nicholas Tsakos, great to see you, founder, president, CEO of Tsakos Energy Navigation. Always great to have you on the show. Thank you so much. Appreciate it. Let's take a look at some of the key levels to watch here. Joining me right now, lead market technician Rick Ducat, looking at the S&P 500. Rick.
I guess my headline to start out with today would be, it could be worse. I mean, this is a time of big swings, of lots of volatility and lots of uncertainty here. So you can see that our major index ETFs, kind of trending downward here, even after today's push. The SPY kind of in the middle of the pack here, up about 21% or so during the past year. So when we also look kind of more specifically at our candle chart, we can see that we had this long period of range-bound activity here. Yesterday's price activity was a bit of a nail biter here because it brought us below this repeated supportive area that also marked old resistance near about 673, 674, around that general point. However, we then formed a large bullish engulfing candle here where the big green candle swallowed up the previous day's smaller red candle here. However, critically, we're not getting the upside follow through today so far. That's an important part of this candle pattern here. You need a big push to the upside the next day to continue the trend. That's part of what resolving the signal requires here. So we can also see moving average confluence here near about 680 or so. That could be a tipping point to the upside, a breakout point potentially. RSI still trending lower though, so look for RSI to cross over that 50 midline. Important volume area right up here is the big one. Kind of unusual to see this heavy volume near 680 up at the highs, but that's where we are. That's where we need to break above.
Rick Ducat, thank you for that. All right, folks, our market meetup panel is standing by. We want to discuss the action that we are seeing on Wall Street. We've taken a leg down. The Dow is down 175 points. We'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
That's where we go.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to the opening bell. Time for our latest update. Our market meetup panel is ready. Alex Coffey and Dan Grant, senior specialist retail trading, Charles Schwab. I think it was really interesting. We just had a great conversation with the CEO of Tsakos Energy. I mean, I thought it was fascinating how he said he has around 6 ships just waiting to go through the Strait of Hormuz and really no clarity as to when they will go through. And the disruption in the supply chain and how that could take a quarter to fix, it shows that we have this issue that is not going away anytime soon. But did not Alex say that he thought oil moves higher and sustainable at high levels? I thought that was somewhat reassuring. What stands out to you, Alex?
Yeah, I think that was a fascinating conversation. It sort of echoes what we discussed at the very beginning of your program, which is oil still driving the ship, but it does seem like the greatest fears have been pulled off the table, at least for now. Now, I'm never going to say, hey, something's not going to happen just because it is such a fluid situation and so many things can change so quickly, as the last couple weeks have shown. But you look at oil now, sub 90 a barrel, down 7%. This is a marketplace that is coming to terms with the fact that there's disruptions, but that's what they are. This isn't a sustainable shift in terms of the oil market. It's a relatively contained, shorter-term transportation and logistics disruption. It's not supply just all out coming offline, similar to what happened maybe when Russia and Ukraine conflict kicked off in 2022. And in many ways, sanctions were aimed to take that Russian oil out of the market altogether. That's not really what's happening here. It's, as you mentioned, it's a supply chain disruption. It's going to take a little bit to get worked out, but ultimately the plan is to work it out as soon as possible.
Yeah, and look, the Aramco CEO and the Tsakos Energy CEO, they talked about this disruption being somewhat, I'm paraphrasing, but unprecedented because, I mean, he's been in business here doing this for 33 years and really navigated through so many things, but never really saw something like this. He talked about getting those legitimate barrels out of Venezuela, being, among the first ships to be able to do that. So, but this is something really different. Let's talk about what's going on in bond yields. So most folks are not seeing a cut anytime soon, Dan. What are you looking for when it comes to bonds?
Yeah, so we have some supply this week, so we want to see how that goes. We have a 3-year note auction, a 10-year note auction, and a 30-year bond auction this week. And it really is kind of, and we have CPI tomorrow. So as far as long bonds, we're having a very muted reaction on the long end of the curve. When we've had market wars, or we've had wars, not market wars, when we've had wars or conflict in the Middle East, it's actually been a big disruptor of the bond prices and bond yields spike. We are not seeing it this time. And then if you walked in on Sunday, if you looked at the markets on Sunday night and then you look at them now, you would be shocked that the market's recovered so much. And, it's kind of an investors versus traders kind of market. Investors are looking for opportunity. Traders are just looking for the market to move and looking for opportunity.
I also think about this too shall pass moments because, this week is the 17-year anniversary of the trough of the great financial crisis, which I can't believe I was standing here. It doesn't feel like 17 years ago, okay, guys? But the point is that, this too shall pass, right? We lost 50% of our money at that time. I think folks really need to keep the big picture here that we're not far off our highs. The market's doing well. The economy's doing well. The city CEO noted that today. Alex, final thoughts.
Yeah, I think that's a really, really good sentiment to end on, Nicole, which is, one, you compare this time to all those other times. It's hard to frame this as the worst time.